Welcome to Illuminati Silver. It's Thursday, the 24th of March, 2022. And we're looking today at what's happening to gold and silver prices, economic reports from the United States, and equities. And immediately taking a look at the gold price, we can see, yes, gold is up $23 today and is currently standing at $1,955. Now, if we compare that, Friday's close, it was $19.22. Well, it's gone up $1 as I've spoken to you. So we're now up $34 on Friday's close. Now, for the week, it's been as low as $19.11, which happened on Tuesday, but today it's back up to $19.56. Similarly, let's look at silver. And we can see silver is now $25.68 today. That's up 72 cents. And on the week, we can see that silver closed last week at $24.99, so just 1 cent off $25. So it's up 69 cents this week. It has, however, been as low as $24.61, again on Tuesday. It's very interesting. So what is causing the rise in gold and silver this week? We'll take a look in a moment. But first, let's just have a quick look at equity markets. Overnight, the Asia Pacific markets broadly up except for the Hang Seng index, but only up roughly 0.25%. UK and European markets, UK is up 5 points, or just less than 0.1%. But the other European markets are down broadly 0.25% to 0.5%. American markets, which haven't long opened, are up between 0.3 and 0.5%. Now, economic news, before we look at the main news, it's been an interesting week so far in that whilst not a huge amount of data has actually come out this week, yesterday's new home sales were considerably disappointing for February, coming in at 772,000, which is down from January's figure of 788 and much less than expectations of 805. And that did have an impact on prices yesterday. Now, today, the initial jobless claims have come in lower again, both for the week ending March the 19th, and the continuing jobless claims are lower considerably as well, which just shows that the employment situation is technically improving. I'm not going to talk about wages and whether they've gone up because we haven't got that data yet, but certainly in terms of the numbers of people claiming joblessness is falling. However, durable goods orders were down for February, 2.2%. Although the markets were expecting a fall, that was only going to be 1%, so it's worse than anticipated. And core capital goods orders are also lower than the previous month. In February, down 0.3 against a positive 1.3 in January. Current account deficit, in all honesty, is for quarter four is close to expectations. Now, we've had some flash PMIs to be reported. It hasn't actually shown yet, so we don't quite know how they are coming into effect in terms of what their announcements are going to be. We suspect that it's not going to be hugely different from market expectations, but who knows? We'll wait and find out. Now, tomorrow we have the UMIT Consumer Sentiment Index, 5-year inflation and pending home sales. We will not be producing a video tomorrow, but will be producing one on Saturday, which will be our weekly update. What we're planning on doing from now on, unless something happens that's unexpected, we're going to produce a video on Saturday, which will be our weekly update, on Tuesday and Thursday. Of course, we'll put out a video if something significant happens, but if it doesn't, then we're going to restrict ourselves to 3, because there are lots of plans in the pipeline I have to work on for the benefit of the channel. There's going to be a bit of a revamp of our channel, and it's taken a lot of time to put that in place, much longer than I had hoped that it would. Cryptocurrencies are up at the moment, and we've got a market cap now Remember, not that long ago it was down to 1.6 trillion. It's now at 1.95, and Bitcoin is just shy of $43,000. So we're seeing the crypto market picking up. On the news, and this is what's having quite an effect at the moment, NATO boosts forces in East amid chemical incidents warning. There's been a considerable, unfortunately, amount of talk about Russia using chemical warfare in Ukraine. It's frightening the market slightly, and it's perhaps to some degree causing the price of gold and silver both to rise. The dollar index is strengthening and is at 98.88. So even though we've got a strengthening dollar, we're still seeing rising gold and silver prices. So going back to the news very quickly, let's take a quick look at this. NATO agreed to boost its deployments in the eastern portion of the Defense Alliance, doubling the number of battle groups to 8, as the US said it is working with NATO to prepare for possible biological or nuclear incidents by Russia. Now, whether this is fear-mongering or not remains to be seen. But what we can say is that with news like this coming out, it is, of course, going to cause, to a large degree, a bit of a panic and also a move towards safe haven assets, which is why we have seen, literally in the last couple of hours, in fact, gold and silver prices actually spiking. Right, that's it for now. Please join us on the weekly update. We've got various forms of technical criteria for gold and silver. It's frankly not worth covering that, because I could say that it's got support at X level and resistance at Y. But while these news headlines are going to affect the prices, then these technical support levels are not going to mean very much. In addition, Joe Biden is announcing new sanctions on Russia, which is perhaps to some degree strengthening the West's approach to making Russia now a total pariah in international markets. And also Russia has declared war on the dollar in a way by saying they will now accept rubles for energy. We have some interesting days ahead. Thank you so much for listening. Please, if you can, give us a thumbs up, but most certainly subscribe to our channel and press that bell sign, because we're not going to be producing videos literally every day at a certain time. It'll be important that you press that bell sign so that when we do put them up, you will be notified. Thank you for listening. Until Saturday. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.